Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today's special guest has been in the forex and overall finance industries for a long time. I believe 3 decades or longer. Yeah. And I really appreciate and I'm very grateful that he's with us today. His name is Mr. Dale Pinkert, and he's with Forex Analytics, which he'll be telling us all about. And not only do we get to see and hear him, but we're going to see some amazing things up on the screen here, some charting wisdom, which I always look for. So, Mr. Pinkert, thank you so much for joining me today on Looking at the Markets.
Thank you very much, David, for the invite. It's fun to be on the other side of the mic.
Yeah, I know that you have a podcast in which you interview the greats, not only of the Forex niche, but all over, you run the gamut of, stocks, options, finance, and so on. And it's just a great podcast, and people need to check that out. And we'll be putting all those links in the description of the YouTube video, so check those out. Now, I see some Forex stuff already. What are we looking at today, sir?
U.S. dollar yen, the risk-on currency. It's called FACE, David. It stands for Forex Analytics Community Experience. It's a live room. It's every day. And the team that I'm with, I've never been with a stronger team. I always tell people, surround yourself by traders better than you. I'm doing that at Forex Analytics. So it's not a podcast. And the interviews are part of the show, about an hour and a half session. And for example, you're right. I've had people on like Peter Bookvar and Mark Newton. And I also like to bring on people that may not be as well known, David, because just because you have 100,000 followers on Twitter doesn't mean that some guy that's got 2 isn't really excellent with his work. There's a difference between being famous and being a promoter and just being an effective trader. So I like to lift people up that aren't well known as well.
Are you trying to tell? Wait a minute. Are you trying to tell me that just because somebody stands in front of a Lamborghini with bikini models doesn't mean that they're the best trader or investor in the world? Can it be?
Yeah, I know a lot of people try and sell that dream. You're going to have to drive some years in a Pinto. In fact, that brings up a great point, David. People ask me all the time. I'm sure you get this question. They say, Dale, can I trade for a living with $10,000 account? And, there's heavy leverage in FX. First of all, that's a formula for destruction, heavy leverage. And I say, yes, you can if you plan to live beneath an underpass. So, I'm a big believer that even great traders should have more than one revenue stream.
Yeah.
Okay, it could be their trading, could be a business involved in the financial markets. It could be completely something else, because if all of your financial destiny is riding on your performance, and even the greats have drawdowns, it then makes each trade too important. And when we make each trade too important, we're bringing our emotions into it, and we're not going to really make clear decisions. We might be impulsive. We might be unwilling to take a loss because we can't afford it. So, you know what? A lot of people say, I want to quit my day job. I say, keep your day job, because be realistic. Most of the people I interviewed, David, I ask them this question: how long did it take you before you had a breakthrough, an epiphany, and started becoming profitable and successful trading?
Right.
And I would say the average. What answer do you get? My average answer is about 4 years.
Yeah, that sounds about right, and that might surprise people who haven't been there and done that. People, like you said, you alluded to the dream that some of these guys out there, the stock gurus, and I put that in quotes, gurus, the options gurus, the forex gurus, they sell the dream that you're immediately going to be massively profitable. In that first year, if you only lose a little bit of money, I think you did pretty well.
Yeah, you're way ahead of the game if you're holding your own. I've blown out accounts.
Yeah.
Most people I know have blown out accounts.
Right.
They're tough lessons to learn.
Yeah.
But really, you can't learn experience.
Yeah.
You can learn from the experience, but you can't learn experience. It only comes with the passing of time
Yeah.
and
Yep.
living through stuff. And in our industry, that time is screen time.
Yep.
So then you begin to recognize patterns and methods that work for you, that are you're patient. You wait for the setups. I use the surfer analogy. You could see someone paddle out to the break line, and great surfers, they're not trying to catch every wave.
Right.
They too wait for setups. So patience and, I would say, persistence are really the secret for trading. You know how people, David, will say, well, for $999 or for 10 grand, I'm going to teach you the secret to trading. I'm here telling everybody the secret to trading is there is no secret.
Yeah.
That it's hard work and persistence and stick-to-itiveness, as another legend, Jake Bernstein, would say.
Sure. Having said that, I think it is a great idea to have a mentor. Of course, experience is your greatest mentor, but I was very fortunate. My father, who is now 83 years old, he mentored me when I was younger as to how to invest, how to be patient, how to wait for the trade or the investment to come to you rather than jumping on it, using small position sizing so you don't blow out your account with those first few neophyte mistakes, things like that. But for those of us who are not fortunate enough,
how blessed.
Yeah.
How blessed that, because most people, David, they get their start, they see something on the internet, 1,000% returns,
Yeah.
or, use my robot,
Right.
like the only robot I liked was on a TV series called Lost in Space.
Sure.
Sure. Yeah, I'm probably dating myself, but
Well, yeah, for me it was
you were very fortunate to cut your teeth that way. You know what? I was too, because I started as a runner on the floor at the Chicago Mercantile Exchange.
Right.
And at that time, they were actually just opened the International Monetary Market, the IMM, and they started trading gold. And that's when there was another gold bull market, went from 100 to 880 into the Russian invasion of Afghanistan.
Yeah.
And I learned from traders. Okay, so I was able to talk to people on the floor and learn about charting, but a lot of people nowadays, they don't have those opportunities, not as many trading rooms for them to be tutored in, and a lot of people are self-taught, and the internet is their vehicle. So I always say, be careful to someone who doesn't say that they're wrong, that is only talking blue sky, and you should not trade with anything except risk capital. Do not trade with your mortgage money or anything like that you and your family need to survive on. And if you're trading with scared money, you're better off reducing leverage so extreme, like in the FX market, you could trade a micro lot, or like 100-point move in the euro, which on a full-size contract would be $1,000, would be $10.
Right.
Okay, now I like that more than demos, because at least you have some skin in the game. And because people don't take demos seriously, they just go, oh, well, it's only a demo. But even if you have a few bucks on the line, you'll start to get the feel for what it's like emotionally to assume risk in the markets.
Absolutely. So I'm looking at your chart right now, and by the way, I'm a big fan of TradingView.com. I use it myself. I see the 200, I see the 50, I see what's either a trend line or possibly resistance. What are we looking at here?
Yeah, so the yen's been really pretty much on fire for a while, and I have a great team with me at Forex Analytics, so I'm actually more negative on the guppy because I think there might be a pop in the dollar and the euro yen, which is a cross. I look for divergences and 3 drive formations, and I learned this from J.R. Hill. Here's drive 1. So here I'll give you guys a pearl. See this RSI? What's it doing? It's confirming the high.
Yeah.
Markets rarely peak, David. I'm pretty sure you know this.
Right.
They rarely peak when momentum is confirming price.
Yeah.
So that's actionable. So as a trader, if I know I have a confirmed high, I should be looking to buy the next dip, because there's going to be another high maybe 80% of the time. There's exceptions to everything. but there's a high probability of another high that may or may not confirm. This high did not confirm. So it's not necessarily a signal to reverse, but it would be a signal, you know what, the market's not confirming momentum. I'm out of my longs, and I'm going to see how things develop. And here's your third drive here. You can see that the momentum reading was well under 70. My preferred setups are under 70. And this is a technique I learned from J.R. Hill in the 70s. It's called a 3-drive pattern. I tie in my RSI work with it too. I've renamed RSI from Relative Strength Index to Real Simple Implicator because of what it implies. Okay, here it implies another new high is probable. Here it implies momentum is waning. I probably shouldn't be long. And here at new highs, it's implying that a turn may be at hand because we're making new highs with a few divergences and non-confirmations along the way. And I've even noticed at times on the third drive, you could get a fractal on the third where this might be 1, 2, 3, but the third drive might be this 1, 2, 3. So I'm allowing for one more shot up as a possibility to add to a position, which also brings me to, I'm a big believer in partial positions because you can't expect perfection at the crap table. You know, every once in a while we hit a trade on the button, there's no drawdown, we have immediate gratification, but I don't know about you, David. For me, that's the exception, not the rule.
Right. Catching the exact bottom or the exact top is kind of like winning the lottery. You know, I don't count on it. I'm sure it happens. You get lucky from time to time, but scaling into your position, I totally believe in that because, you know, when I'm ready to jump in, I understand that I'm not going to catch the exact top or bottom, and so why put the whole thing in when if I take a long position, I expect it to go down a little more, and then I put the rest of it in, or I put some more in. It makes sense.
And I believe in it's as or possibly even more important with the winning trade that you take something off the table. And maybe you look for 50 pips on your position, so you trade multiples. And that way you're in a win-win situation. You're not as short or long as you would be if you hadn't have taken half, but you've gotten paid. And then if the market retraces and you still believe in the trade, you're recommitting with profits rather than principal. Or you just take half off and drop your stop at BE on your entry where you sold it. And the worst case scenario is you've made money, you've taken all the pressure off. It's a riskless trade now.
Sure. By the way, I see what might be called a death cross around June, and then back to a golden cross right at the beginning of July. How important are those moving average crossovers?
It's not part of my work. I just mainly use moving averages as potential target areas, and I look for confluence by perhaps drawing some fibs in as well. So to me, I'm not a moving average crossover type guy, but I use them as more as support or resistance levels. And, when you're a trader, it's almost like being an attorney. And the more evidence you have, the more you build your case, the higher probability the outcome is. Okay?
That's a good analogy.
So, when I have a moving average coming in around a fib retracement, and technically this is what I'm looking for, so I think there's a possibility if I'm right and we get a breakdown at 38, we need to take 46 out first, but I think this is a reasonable objective. It's where it broke out, and it's halfway back at 43. So there's confluence between the moving average and a fib. Fib level. So the more evidence you have, the more compelling the trade is.
Absolutely. More confirmation, the better you can feel about the trade. Cool.
And I have a great advantage. Okay. Prior to joining Forex Analytics, I was hosting a live trading social community on FX Street called LAR, the Live Analysis Room. And I'm a big believer in social trading because we only have two eyes.
Right.
And I relied quite heavily on the community, and there were guys, it wasn't a hobby. They were there, and they were, giving me screenshots like this, and perhaps I wasn't even paying attention to the guppy. But their analysis, after a while I watch it, and I watch it unfold correctly, pretty good hit rate, would start to give me, at least I wouldn't want to be on the other side of the trade, and might point my way towards a trade. At Forex Analytics, I have the advantage of not just the community who still participates, but a team of great traders. So this is a Elliott look from Greg Horvat. Okay, so we're in agreement that there's a potential top here in an ABC coming. Greg won awards on FX Street for best buy-side analysis. Then I don't know if you follow her on Twitter, but you should, Nicola Duke. She does our harmonic work. Okay, so she has some type of harmonic pattern here, A, B, C, D, with a potential topping out here. And then we have someone that's also well-known, highly respected in the industry, Blake Morrow, doing the basic technical. His Twitter handle is @Pipzar. So I'm not even through yet, David. Can you tell the team I have to collaborate with? It's outstanding.
Yeah.
Plus different methodologies pointing towards the same thing. Steve Volge, I knew Steve from Twitter, but now that I do webinars with him, he's one of the most patient, disciplined traders I know. And he, unlike me, my friends used to say, Dale, you like to hear the ice crack, because I'd anticipate moves, and you really don't know until you get closes. So Steve's a very good trader. He was short silver and Aussie last week. And then we have Stelios, who worked for a bank for many years, and he's excellent on macro. So we have, and within these, we have different time frames.
Yeah.
Okay, you have daily, you have weekly. So I'm intelligence gathering with great traders.
Yeah, clearly.
And,
now, when people go on to Forex Analytics, and that's with an X, not a A-N-A-L, let's see, A-N-A-L-Y-T-I-X, forexanalytics.com. When people go on there, will they have access to first of all, to your insights as well as those of other traders?
Well, the room is free.
Yeah.
Okay, so they have access. We use a GoToWebinar room, and anyone can come. I only have a few rules in the community. One is that we don't root for others to fail, so that you could rationalize your own failure.
Right.
And we also have respect for guests that I bring in, whether you agree with them or not, or think they don't have much to offer to you. They're offering their time to come in and edify us and possibly get some business. So besides those two rules, it's pretty freewheeling. I even sing once in a while.
Very good, sir. Yeah, I see on there you got your free webinar. You can register for free. I don't see why people wouldn't at least check it out. There's no reason.
And then if you want to try the traffic light page, and we also have push alerts that go to your phone. Mm-hmm. And these guys are, they're at it 24/5 or 6. So I know Blake makes trades from the grocery store.
Right.
So you don't have to be chained to your desk in front of your laptop to be alerted if something significant is happening, like an alert where support is breached or target met. Those are sent out instantaneously.
Well, people should certainly check that out. At least now, it looks like if people come in, yes, they can get the free content. What about if they want more than what's just available for free?
Well, they could join. There's different levels depending upon what coverage, but you get to see it all for $1 for 10 days.
$1. You can't beat that. Yeah, that's great.
Yeah. So at least you have 10 days to, also there's tutorial videos on how to max it out and get the most out of it.
Yeah. People really should take advantage of that, and that link will be in the description, or you could just go to forexanalytics.com. All right. So what else is going on that's noteworthy in the markets right now that you're seeing?
Well, we're kind of in the summer doldrums, and myself, I think there is going to be a correction within the next millennium in the S&Ps, but we're right here now, 2400's a line in the sand.
Yeah.
But I could make the case for another new high up towards 2460, 2470. The problem with that new high is on the weekly it's not going to confirm, because we've been diverging on the weekly since the high in March. We have not made a new high on the weekly. Probably will on the daily too if it's a quick blow off. But under 2400 is kind of a line in the sand for a correction.
Yeah.
But I think we could try 2465, 2470 first, just to flush out the bears. You know, people ask me this, David, you know, my handle is @forex stop hunter. And they go, Dale, how do you know where the stops are? And I just say, well, why don't you pretend you're short this market right now? Where would you put your stop? That's where they all are.
Yeah.
If you're long the market right here, where's your stop? Under last week's low? Maybe you're giving it more tolerance down here. But I would bet that there's a few buy stops above the high here at 2453. And there were some harmonic levels that weren't hit yet. But back under 2400, I would expect a correction, but I think we get one more high into late July, and then we get a correction into the fall.
All right. Sounds like your volume might be cutting out a little bit there. You might want to check your mic there.
Okay.
Yeah. So that's, you know, what's really interesting. I don't know if you agree with this, but some people would believe that the market actually knows where people put their stops and deliberately run those stops. They take them out. Because people do tend to put their stop losses at the same places. Round numbers, for example, any number ending with a 0, or the 200-day moving average, or the 50-day moving average, things like that. Is that paranoid thinking, or do you think there really is something going on like that?
Well, on the floor, when there was open outcry, your filling broker had a deck, and all the stops were in the same place, right? And they were always, when I was a runner, very interested if it had STP at the end of the order. And I'm sure they got long into buy stops and used that liquidity to cover their longs and maybe even reverse, because in open outcry you used to hear actually a roar. You'd hear, you know, a volume of the traders going up as they're electing the stops. It would go fast market. I'm pretty sure that algos have that figured out too, and they know where they're at. Probably figured into their black box formulas. So I look for that. You know, I look for stop hunts, and you know, if it's an important high and it only takes it out by 20-30 pips, and then an hour later it's underneath that level, pretty high probability that was a stop hunt, because mean Mr. Market is always going to shake out as many participants as possible before the move they're looking for occurs, and then most likely without them.
Right.
He's a mean guy, David.
Yeah.
That Mr. Market, he's a mean guy.
Very good, sir, and very true. Now, as far as, all right, so I kind of have an idea of, you know, obviously you use stop losses. Where do you put your stops?
Well, I put my stops based upon 3 drive formations. I like to give them tolerance over a high, okay? Like I was saying, I'm not going to put it right over a high. And a lot of my trades really don't happen until I think stops are elected. And then after they're elected, they've cleared out that area, then you could drop your stop there. So, you know, you could start looking at your screen and thinking, you know, where are the stops? You know, here's the euro. Let's get short term with it. Okay, so we weren't able to take out the highs here on the NFP. So I know there's a ton of stops here, but I actually believe that the stop hunt's going to begin on the downside in the euro. So I think they didn't take these stops out. I think they will. I think there's a chance that they take these stops out, because look how many stops were taken out on the way up. Okay. They took out these stops. They took out these stops. This was the grand prize was here. That's why I think there's probably a correction coming. This was the election high. Okay, so that was November 9th. And any long-term euro bear this is it. They gave up hope under 113. So back under 113, you could get a decent break.
Yeah.
Although I think there's more left, because when you look at the longer term formation in the euro, I'd love to see a break back down to 111, 109, 108, because this is pretty much a nice range trade that gets to horizontal.
I'm looking at your watch list right now, by the way. I don't see any individual stocks or companies. Do you mostly focus on currencies and
indexes and crude and gold, and not individual issues?
Okay.
Although if you're still long Amazon and you see 1050, I'd sell it. Nicola Duke talked about 1050 about, I don't know, a month or so ago, and we've had this pullback. If the market's going to make a run, 1050 could be a good out. Some method that she learned about big round numbers, and 1,000 being one of them. So if you look at this, it's a huge base. I think eventually we're going to break out.
Yeah.
And really, when you look at the euro, I mean, it's down from 140 to 104. You could say it's a new bull market, or if you have a broader perspective, you could say it's a hell of a bear market rally, and 120 is not even halfway back.
Yeah.
And then we could start another dollar rally. So that's my view. I think that the dollar might have trouble, and I think it might even be good for the market because it takes some of the pressure off the multinationals.
Sure. I noticed that obviously you're a chart guy. We haven't spent a lot of time integrating just fundamentals into this, just the news, things like that. Do you trade off the news?
Oh, well, I have a saying that people who buy headlines today sell newspapers tomorrow. Like going into the NFP or a Fed meeting, I'll flatten out or be very minimally positioned, looking to react to the reaction. One day I was hosting a webinar, and it was an NFP day, and it was a weak number, and the euro exploded. And a trader came up to me and said, "Dale, I bought the euro before the NFP." I said, "Good guess. I'm glad for you, but it was a good guess," because that's really a binary bet of how the market's going to react to news. I'd rather react to the reaction.
Sure.
But I don't poo-poo it, because I know, I have several friends and contemporaries that are news traders, and they know how to do it. And also, Blake Morrow says you only have half the picture if you're not paying attention to the fundamentals. So he does a lot of fundamental analysis, and I learn from Blake whenever he breaks things down fundamentally.
Yeah. As far as the currency markets go, if somebody's a beginner to trading or investing, do you actually recommend they jump into currencies, or should they start with something that might seem simpler, just, stocks, something like that?
Well, to me, a chart is a chart is a chart, and the only difference is the title on top of it, the leverage used, and the beta. So, that would, pick your own poison. But the most important thing is to have reduced leverage. So I guess probably buying stocks not on margin would be a good way to start. Or trading, like I said earlier, micro lots, where even if there's a big 2-3% move in the currency markets, which are rare, you're going to lose $30-$40.
Yeah.
And you're not, you're still going to, and you can learn. And a lot of people, that started in stocks gravitate to forex because they like all the different possibilities. They like the 24-hour nature of it. I mean, even though we have aftermarkets, they're not as liquid as FX markets are.
Sure.
Compared to when the stock market closes. And so, might fit into their schedule to be able to come home at night and trade the Asian market while they're working during your U.S. hours.
Yeah, absolutely. And just one more thing I definitely want to talk about. I see you got the volatility index, the VIX, up there, which has been, it just won't go above, gosh, even 13, not to mention 15. I remember when 15 was normal for the VIX.
Yeah.
Nowadays, what's the new normal now? 12, 11, 10,
Yeah.
single digits. So is this the new normal for the VIX? Can we expect this to continue indefinitely?
No, I don't think so. I remember when I liked gold in 2000. Back then, people were saying it's an archaic relic. What are you going to use it for? A paperweight? You can't eat gold. All that stuff. Okay, so of course, this has been a huge time frame of dormancy.
Yeah.
But if you notice, we're not confirming these new lows. I'm going to be interested to see where the VIX is if there is one more shot up to, maybe another 40 handles, 35 handles in the S&Ps, because this is starting to look like a beach ball that every time you push it under the water, it pops back. So despite us being at new highs and grinding out new highs, it's not falling apart. It's not 7.5.
Yeah.
So I think that I was taught, I heard this expression, that markets top with violence and bottom in silence. And if this isn't a dormant EKG of someone in a coma, I've never seen it. So perhaps bottoming in silence.
Yeah.
And should we ever get back above this trend line that you're mentioning, we had 2 attempts at 16 here in the last few months.
Right.
We start closing over this channel line, starting to look like a wedge to me. And my rule for wedges is not that they correct 38% or 50%, they correct 100%. So once we have a breakout, then we could get maybe back to a little bit more normalization. Maybe that happens into the fall, and that's 32. So the target after a breakout in VIX over, say, 15.5, 16, initially, they're going to go for this 22.5, 27.5. And here, and I've also been doing some reading that there's huge net short positions in VIX futures.
Yeah.
So be careful.
Yeah.
Be careful. Picking up pennies on the sidewalk, and then you get rolled over
by a steamroller. Yeah, no, it's true. And there are people who are making good money now. I've interviewed some of them, shorting UVXY, TVIX, VXX, every time it pops even to 15. And they've been right so far. But, I don't know if that trade can be viable forever.
Every VIX has its day, David.
Yeah. Very true, very true. Just wanted to touch back onto forexanalytics.com one more time. Let's take a look at that if you don't mind. Again, what do people get when they go onto forexanalytics.com?
God, they get everything. They get the traffic light page where you're going to be getting streams of all the new recommendations that come out here. You'll see it streaming here. These are all updates. They could load the app on their phone, so they'll get the push alerts. They could go to any currency and then go to macro, candlestick, basic, harmonic, Elliott wave, all the support resistance levels. We have patterns in play. These are recommended positions. We have about a 70% hit rate on these. You could design your own Twitter page on this. It would take me 20 minutes to talk to you. You get it. I've never seen a site where you could want to do anything on. Think of something you want to do on a website, and you could do it here.
Yeah. And of course, nothing that we have said today is a suggestion to buy or sell anything. I am not a licensed or registered investment advisor. Do your own due diligence, do your own research, make your own decisions. But
I like to say in face, David, we're all captains of our own ship. No one's responsible for clicking your mouse but you.
That's right. That's right. But if you have to click it anywhere, this is as good a place as any. forexanalytics.com. Mr. Dale Pinkert has tons of wisdom to impart, and I've gotten to take part of that today, and I'm very grateful. Mr. Pinkert, you're welcome back anytime, sir, on Looking at the Markets. Thank you so much.
I appreciate the invite, David. It was fun to be on the other side of the mic, and you're going to have to return the favor and come and be interviewed on Face by me. I'm going to grill you.
Looking forward to it. Thank you so much.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.